Hi, this is Michael Waits, and welcome back to India Game Changer. We are joined today by Prashant A. Bhonsle, the founder of Kuhoo Finance. Prashant, thank you so much for coming on the show. How are you doing today?
I'm doing absolutely fine. Thank you very much, Michael, for having me. This is a great podcast. I can't wait to have a great discussion with you.
I just love the way your voice sounds. It sounds so good. That's a little bit of an inside joke between you and me.
Yeah,
Okay, before we jump into the main part of this conversation, let's give the listeners a little bit of your background for some context, please.
sure. As you said, my name is Prashant A. Bhonsle. Bhonsle is a little difficult word to pronounce, so I'm making it in the way. Um I
Thank you.
belong uh, to a small town in India, the town called Indore. It is in the central part of the country, and um, the population is about, I think, 15 lakhs or something, 1.5 million. Um I was raised there. My father belonged to some other part of the country, Maharashtra, this part of the country, and my mother belongs to the central part of India. We got My father got settled there, and I was raised. As I said, I did my schooling and colleging in Indore, and then I started. I was studying slightly ahead of my time, so I was graduate when I was 18 years of age, and I come from a very humble background. So I had to start working uh, to support the family. So I started working almost immediately as I graduated at the age of 18 years. And I started my career with the pharmaceutical industry. And I was a medical representative in the early part of my uh, my work experience. Then after a few years, I shifted my industries. I shifted to FMCG, worked with Pepsi for some time. Then
Okay.
then to telecom. I was when telecom revolution in India, mobile telephony revolution started in India in about 96, 97. I
Yeah.
worked there for a couple of years, then moved industry again. So I joined Canon India for some time. Canon, the photocopiers, faxes, and multifunctional devices and cameras and stuff. So I was there for about 5 years, and in late 2001, early 2002, my journey of financial services actually started with ICICI Bank. ICICI
Ah,
Bank was kind of changing the rules of the game in banking industry. At that time, they questioned and changed almost everything that was sacrosanct in banking industry. And Mr. Kamath and a lot of his talented team of leadership was driving that change in India, and they, according to me, changed India forever and during that decade. So
what was driving that change? In other words, what happened? What was this seminal event where that team got together and said, "We want to change the entire financial services sector"? And was it related to mobile as well, or are those two things not related?
not related at that time, though. ICICI was and continues to be one of the most relatively technologically advanced banks in India. However, the change was more to do with making retail finance available to the common man in India. India was changing then, and the access to finance was not as easy as it is today. Access to loans were not as easy as today. Our per capita income was, I think, less than $1,000 at that time.
Got it.
And so what I think ICICI Bank did phenomenally well was uh, they right from the product innovation thinking, market approach, and they were, I think, one of the first ones to go out and start um, uh, uh, recruiting third party distribution channels to distribute this product.
Got
Earlier
it.
it was a branch driven model. It was public sector banks, and if you wanted a banking product, you had to walk into the branch and take it. Internet was not available at that time, and you had to walk into a branch, every branch, and branches were sparse because it's a large country. So what they did very very well, they introduced technology, whatever technology was available at that point of time, but they also involved a lot of third party distribution to distribute this product to the nooks and corners of the country, and that
Yeah.
changed a lot of things. So that happened. I was there for about 5 6 years, and then my kind of first stint with a little bit of entrepreneurial journey started when I moved out of ICICI Bank, and I became part of the founding team of a company called Credila. And this company was India's first private student loan company in 2007.
Got it.
Now, at till that time, between 99 2000 to about 2007 8 were the heydays of retail finance growth in India, largely driven by ICICI, and then everybody else, HDFC Bank and Axis Bank and SBI, everybody started taking notice and followed suit. uh,
Yeah.
and it exponentially grew the market, changed the way people were perceiving financial services, and so on and so forth. And at that time, when home loans and personal loans and car loans and auto loans and all of those things were exponentially growing in India, penetrations were increasing. One asset class, which was education loan, was not growing in tandem with other asset classes, and that was very intriguing. Nobody actually thought, and actually personally I didn't think about it because I was handling large portfolio in ICICI Bank, and we were doing all kinds of loans, and very very aggressively we were growing 4x 5x 8x 10x almost every year. And two gentlemen, two brothers actually, who were educated in US, went from India for their higher education, called Ajay Bora and Anil Bora. They went to US in late 80s early 90s for their higher education, stayed there, worked and all that. They wanted to come back to India and start something, and they brought in this concept of student loan, because student loans in US at that time was about $1.5 trillion
For
market.
sure.
uh,
I had a student loan. I had a student loan when I went to college.
Great.
So yeah.
So they brought in, and I was very intrigued that when I was part of this retail revolution, retail finance revolution in India, and we never thought about education loan. While India continues to be at that time even more, but continues to be demographically one of the youngest countries. We have large student
Yeah.
population and all that, but student loans were not growing as fast, or not growing at all. Actually, they were almost stagnant at that point. I think I remember only $3 billion student loan outstanding was there. Uh,
Oh wow, it's tiny.
they are very tiny, as compared to about I think $100 billion of US, or $1.5 trillion of US. So that happened, and I became part of that journey, and it was life changing for me. Changed my everything I'd learned till then in my work experience and life. Everything changed. It was, I think, put on, the logic was completely inversed. So I learned a lot of things. I learned entrepreneurially how people think, and building a company from scratch, hiring people, hiring talent, building systems, processes. As luck would have it, we got a little successful there, and Credila eventually, then HDFC invested into it after 2 3 years, and it became HDFC Credila. And
Oh
that
wow.
company, in about 7 8 years, that 7 years that I was there till about 2014, actually had built more than $500 million of book, and that company got sold to Bearing Private Equity last year for $1.5 billion. And
Congratulations.
uh, but I'd moved on after
Yeah,
setting
yeah.
up that company in 2014, and then I was part of a tech startup for about 2.5 years. um, and then a very innovative tech company, platform as a service, so tested B2B2C market. Then I again came back and to fintech industry. Fintech in 2016 was just starting to take off in India. um,
Okay.
and I joined a company called Incred Finance, which is another unicorn now. It was getting set up by buy another.
I think I want to hire you to work in my company because every company that you join turns into a unicorn. You're hired.
I have been blessed and lucky. I can't
You,
be more grateful. But
I love it.
I was probably at the right place at the right time also at some.
Fair enough.
Yeah. So I started setting up that company with the founder, and that company I was handling 3 4 products, personal loans, student loans, of course, and home loans, and two-wheeler financing to rural India, and so on and so forth. We expanded. For 5 years I was there, and then Kuhu happened because
Yeah,
uh,
why?
sorry.
Why did Kuhu happen? Like, what was the inspiration here? And actually, before we get to that, I want to make this point. It sounds to me like you had a career that was kind of parallel to mine. Like you said earlier, like you feel like you were in the right place at the right time. I say this a lot. Like I feel like if I had been born a year earlier, I never would have had the life experience that I had. And if I was born a year later, like everything just would not have fallen into place in this way. And I feel like your career kind of tracks, what is this called? Like the liberalization of the financial services world in India. And that's why like that background that you have is so interesting, right? Because like you said, when you were at ICICI, even if they were a technologically advanced bank, they were building the stuff, they were innovating around it. So you were there when that was happening, when that changed from just being, you had to go into the bank branch to get your product to we're going to do third party distribution. We're going to figure out how to get into the smaller nooks and crannies of India. Cause like you said, it's a very big country.
Correct.
And then you started innovating in other parts of the financial services sector. So it's like your career actually mirrors this progression, which I think is kind of cool. So tell me, why did you start Kuhu?
So this is the so by 2020 2019,
Mm-hmm.
I was almost about 25 plus years of experience across these companies,
Yep.
and I had done um, student loans twice over,
Right.
right? So once with Credla, and it became HDFC. I saw the whole cycle from starting the company from scratch to scaling it up profitably and all that. And then another fintech that I did. So I had done in which also I did a couple of uh, few $100 million of student loans, very good quality asset. So second time around, so couple of things happened, right? Serendipity also. I When I was working with Credla in late 2010, so 2009 and 2010, we were raising equity, and I happened to meet uh, a few private equity players instead, people like that, and I happened to meet a gentleman called Sumit Chadda. He had come to India for setting up Sequoia. He's a
All right.
uh, and I'd pitched him the product. He quite liked the company, what we were doing there, and he quite liked. He said, "You're very passionate, diligently build this business, and would like to be part of this." And fortunately, unfortunately, at that time, our deal happened with HDFC, and HDFC became part of Credila rather than him. Over the period of last about 8 10 years, um, then he went back to US, and he was investing heavily into he's part of very very large fund. He was a co-founder. He is the co-founder of Westbridge Capital, and he is keenly interested into Indian finance, and very very heavily invested into Indian financial services, large companies and patient capital, and so very passionate about India and the journey and all that. So, and over the period of time for last 10 odd years, from 2010 to 2020, every now and then he would want to come and see if there is an opportunity to invest into education loan, because India is growing and education is very very important for the country
Yeah.
and middle class and all that. And somehow, as luck would have it, a lot of opportunity came and the deal didn't happen. And then at that time, we got connected again through a common friend that had met me earlier in 2007 and 8, but had ended up working for him in the Silicon Valley. So when we were talking and this happened, and serendipity, right? So then we got connected again, and then he said, why don't we do what we couldn't do
Talked
earlier?
about before. Right.
Let's do it now. and now the market is also much better position. It's tested product, it's a large portfolio now, and couple of companies got successful. So and you are that one part. The other part is I continue to be very, very passionate about education as a impact and changing life aspect of education, right?
Yeah.
I come from a very humble background. I was a decent student. I could have gone to a very good university, but if my family could afford it, they couldn't, so I had to start working. And
Right.
so I understand there's a lot of talented Indian students that I think that data says, right, 25% of high IQ Indians are more than a lot of countries population, right? So there's a lot of
Almost by definition, right?
yeah, so a lot of talented Indian students just could not access or follow through their dreams, right? Just because they
So
could not access.
can I ask you this though? So how much, because I'm not familiar, and maybe you can translate this into dollar terms or even just percentage terms if it makes sense, right? When I went to school, just so you know, like I was from a very, I wouldn't say poor, but very humble family as well. And my dad had 4 kids. My sister was in college. I was in college. My brother was in college all at the same time. I luckily, again, like you, I had a full scholarship. So I had to take out a small student loan, but I paid that back myself. Right. So my college life didn't impact my parents' finances, but my college alone, my 1 year tuition was 75% of my father's salary
Correct,
pre-tax,
correct,
right? So it would have been impossible for him to pay for it,
correct.
right? And that's not a knock on him. He was hardworking and did all the right stuff. It was just that like college is just expensive. I'm curious what it's like at a good, like for a high IQ student in India who wants to go to like IIT or wherever it is, right? What is this? What is the same relationship, if you know, just in percentage terms, where here's what it costs and here's what the GDP per capita is?
Yeah, but no, but GDP per capita is very, very low. Though it's now the fifth largest economy and one of the fastest growing economies.
Sure, in the world.
However, because the large population, we are the largest population in the world now. So
Yeah.
we overtook China last year. Coming back to your question, so yeah, so look, per capita income in India is somewhere around 24 $2,500 right now. It's inching up regularly and at a
Right.
good rate. So hopefully we will cross the magic figure very, very soon. However,
Which is what? Which is what? $3,500.
no, I think about 27 $2,800 dollars is what I'm told.
Right.
Around that, give or take 5-10%. But after that, it is said that a lot of things starts changing. So for example, after $1,000 or
Savings.
$1,500, other than the three basic needs, education and healthcare becomes the basic need, not the luxury, right?
Yep.
Similar, a lot of other things will start changing after this number. However, coming back, so the cost of education versus the affordability is the question you're
Mm.
asking. So affordability uh, for a good college, for example, management MBA, one of the top MBA institute in the world is a institute in Ahmedabad called IIM Ahmedabad, right?
Yep.
It is one of the top institutes in the world, actually. Of course, the number one in the country today in India, but it is one of the top MBA institutes in the world, and it is very, very difficult. They get, I think, the application to admission rate is around, I think, some 50 100 application to one admission, right? So it's tough to get in there.
Yeah.
That course in 2007, when we were starting the first student loan company, that that course used to cost for 2 years about 3.5 lakh rupees. uh, so 3.5 lakh rupees converted to dollars is about 10,000 is 7 lakhs, 20, so less than so around 5,000, if I'm doing my calculation right, about $5,000 for 2 years.
It's about $10,000 right
10,000.
now, 3.5 lakhs.
Yeah.
It's
So
about 10 grand now.
then suddenly after 2007, that cost now in IIM Ahmedabad is about 35 lakh rupees. It increased by 10 times, actually.
Oh my gosh.
So that education inflation is going, it's at least for the top colleges and also middle colleges, it's going
Yeah.
exponentially high. Education and
Yeah.
healthcare, by the way, the inflation is 2.5 times more than the normal inflation.
Which is terrible. Which is just, we can have a whole conversation about why that's all wrong, but it just is what it is for now. We can talk about how we can fix that later, but
Correct.
it's just a fact now. Yeah.
So you see the affordability, even if
Yeah.
you
It's
want as a normal average Indian family who's earning less than, let's say, $1,500 per capita,
right.
uh, if you remove the top layer, then it becomes lower. That, if they
Yeah.
have two kids, which normal Indian families now on an average two kids plus, uh, it is almost impossible
Possible.
for them to finance the both the kids education in higher education. If they're good people, they're talented, they would want to go to higher, a good institute. A
Sure.
good institute will cost very high, so
Yeah.
almost impossible for them to do it. However, a lot of government's policy and schemes have also come in to be fair and honest. They are trying to subsidize talent, and they're trying to subsidize some of the courses and institute, but large chunk of that population does not have that access to
Right.
it. Yeah.
Yeah. And that's all wrong. So what does Kuhu do? Right. Because here's the thing. I remember when I took out my loan, and it was small in comparison to what student loans are today, for sure. I took out a $5,000 loan. I paid it back with my first bonus from Morgan Stanley, and I never looked back, right? But I was, again, very fortunate, right? I grew up humble. I got a job on Wall Street. And as I told you, my whole life changed, right? So very lucky, very fortunate to do that. But to be fair, when I filled out the loan application, I had no idea what I was doing. I didn't understand anything about it at all, and nobody in my house was there to help me. How do you and I'm presuming that some of the Indian students are the same way. Just because you're super smart doesn't mean you necessarily understand financial services products unless somebody's told you about it, right? So how do you teach them is maybe the wrong word, but give them the proper financial literacy so they can make the right choice between like this loan, that loan, or the other loan?
Yeah. So I think it starts with we've mapped the student life cycle backwards and forwards. So, for example, if somebody, let's say, is joining fall 24 or fall 25 class, right?
Mm-hmm.
Somebody aspires to join fall 25 class, either, let's say, go abroad, US, do MS in computer science, or
Yep.
do MBA in India. Fall 25 will be July, August, June, July, August, September 25. Their journey of that admission, when their session starts around 18 months to 24 months before, right?
Before that, okay.
Yeah, so they need to start now preparing for the entrance tests, whether it is GRE, GMAT, TOEFL, IELTS, so on and so forth, and Indian entrance tests and all that. And it applies to all kinds of courses, right? When they start preparing for it, it's almost 4 to 6 months they'll prepare for it, and then they'll take the test. Once they take the entrance test, they get their marks and all that, and then they start applying around 9 to 10 months in advance. So for fall 24, your admission cycle will start around October, November of 23, right?
Okay.
So what we have done is, during this time, what happens is, they first start thinking about whether I'll get an admission or not, what kind of course I want to do, whether this course is good, whether I'll get a good job or not, my career, and so on and so forth. There are a lot of questions there. So we try and answer those questions. We try and first touch base with those students much earlier in this life cycle, right? And how are we different than other institutes? Let's say, for example, banks are largely dependent on the customers coming to them for loan. So when
Right.
customers come, or the students will normally come to them around 2 3 months before they need to leave, not about 8 9 months before they leave. So what we do
Right.
is, we use the digital channels and our college outreach, and we go to test prep centers and all that. We conduct a lot of webinars, seminars, so on and so forth. So that we start doing much before in the cycle. So we start telling them, and this is what we do. And then over the period of time, then we tell them that there are two fundamental questions, especially in Indian context, the students want to and parents want to know, whether I want to do this course, whether I will get a loan or not, right? And
Yep.
if I do get a loan, how much of loan out of the total cost that I'm going to get, right?
And
These are
how will
two.
I pay it back? Yeah.
Yeah. And then third question, of course, is if that is the loan, is there a way for me to right now fix that? How am I going to pay that loan? So these are the three questions. So what
Yep.
we do is we try and do this kind of planning, and we're trying to convert that into now algorithm and put it on our Kuhoo mobile app and all of those things, and that will happen in next few months. But right now what we do is we have a lot of data across the world about the university, how the cost have changed, what is the impact if they want to go abroad, what is the also impact of, let's say, currency exchange rates and all that. So you,
If they're going to the US,
yeah,
yeah.
or US, or you,
Or
because rupee
London or
has
whatever, yeah.
depreciated last 10 years, let's say whatever percentage. So same $100 fees now cost in India rupee much more than what used to cost about 5-10 years back, right?
Right.
So all of these things people are not as keenly aware as that they would want to be. So there we try and help as much, because we have the domain expertise for last 15 years. The team has spent a lot of time in doing this code. This is a very, this asset class is very domain expertise driven asset class for
Yeah, for
from
sure.
lenders point of view, right? So you don't need to, you in this asset class, your financial expertise or lending expertise is more or less similar to banks and all that. But if you have the knowledge about education sector and how the education and different colleges, the potential employability, potential courses, potential income, how the career trajectory in this segment, what is the demand for skilled worker for, let's say, STEM courses and so on and so forth. So those are the things we continuously do, our research data science team do, and we use this data to educate, not inform customers and students and parents. That's how we try and help students and parents.
Can I ask you this? Trust, right, is so important in financial services. It's basically the key thing. When you go and do these seminars, when you do webinars, when you connect to the educational facilities, how do you get the students to trust you? Because let me understand, like Kuhu's not a bank. Are you underwriting these loans or you're not, right? So you're dealing with the banks and then passing on those financial services to these kids or students. How do you get them to trust you? That's the most important thing, yeah?
Great question, Michael. Absolutely brilliant question, especially in Indian context. Even loans need, where the lender is giving money to you, then also the people need to trust you, right?
Yeah.
Because that we are not putting any hidden clauses in the
Yep.
agreements and so on and so forth, right?
Yep.
So some things help. For example, the team, my background, and some of the senior leadership team that I've got, and I've got, I've been lucky that they decided to come and work, because we work together in Credila and so on and so forth. So there is some credibility attached to the track record that we have done it multiple times, right?
For
So
sure.
there is a little bit of credibility there. So invariably, students and parent, invariably, and even the academic institutes, when you reach out to them, they search your background. They try and find
Yeah.
out what have you done, and it's easily available now. That information is public, right? So that gives a little bit of credibility. The other thing is also, in India, the uh, student loan penetration is relatively much lower than other penetration, right? So the availability itself is very high. So uh, they need to find a solution. so
Right.
so they will, so you go and tell them. Third thing is, very importantly, that eventually your knowledge that you're sharing with them will give you that trust, because we'll give them the trust that these people seem to know what they're talking. When we tell
Yeah.
them that this is the course we have evaluated, there's so many hundred students that we funded or facilitated doing this business for last 10-15 years. And fifth thing is that we have partnered with a lot of banks and NBFCs who have a large trust factor already established, right? So when these people are partnered with Kuhu, that means they must be good, right? So these
Yeah.
are some of the things which happen. And then there, it's a trust is a slow process. So when
Yeah.
you do, every moment of truth, you either lose it or you gain it, right? So every touch point.
Fair.
But fifth most important thing, you, I think, brought in good luck for us, Michael. I want to share very good news with you,
Tell me.
that after you we spoke, I think 2 weeks back or something.
Hmm.
At that time, our NBFC license process was going on. We had applied for a to become a licensed lender in India, and we got it last week. So
Awesome. Congratulations.
so now we can do, we are a we can do, and after we've set up this in next couple of months or something, there's some compliances that we'll go through and all of that,
Good
as
for
per
you.
the RBI. And we will start building and booking loans and go doing our own product also after after very very shortly. So I think that we have become a, lender ourselves.
That is really great. So does that mean you're going to build up your own balance sheet as
Yes,
well?
yes, that is
Good
true.
for you.
That is
Good for you, because that, in a way, that's going to make you more profitable, right? Because it's a lower cost way for you to still provide the same and even better services. It'll also allow you, if I'm correct here, to innovate faster, because now you're not going to have to get the approval of your underwriting partners, since you are the underwriting partner. So you can create these
absolutely.
products. That's super cool. Congratulations. That's a
Thank you
big
so
deal.
much. Thank you so much.
Um, no, it's completely my pleasure. I want. It's kind of a technical question, but when I was coming out of college and getting my first job, most of the kids that I went to school with, and I think it's probably true today too, they would work for a couple of years after they got their bachelor's degree and then go back and get an MBA, right? Because all the things you learn in a master's of business administration have no context unless you've had a job already, I think, right? Is it the same in India as well? Like, do they go get a job first? Because in that sense, then they'll understand income and what to do with their income. They'll have a little bit more financial knowledge, right?
Yeah, absolutely right. Though in India, it's slightly different. It's changing and it's
Okay.
coming much closer to what the world trends are and have been. Uh, eh, all the large, very good reputed universities, especially in management courses, actually
Hmm.
prefer much senior
Yeah.
people than freshers, right? However, in India, traditionally we were not like that, but traditionally about 10 years or 15 years back, almost 80 or 90% of the MBA classes were freshers. They would complete their education and they would directly get into those MBA schools. However, over the period of last decade or so, this trend is changing. More and
Yep.
more institutes also prefer now, especially the management institutes, that prefer experienced candidate, because the appreciation of the concept which are taught to them are much better. Also they
Right.
are they're much more potentially employable also. They get, so it's a
Right.
marketing thing also for them, but
For
more
sure.
for so that is changing. However, it continues to be about 50-60% of the entire batch, about 5,000 MBA colleges in India, about 500,000, half a million of MBA graduates every year. About 60%, I would guess, continues to be 60-70% still are freshers, and they continue their education post their graduation, complete the MBA, and then get into job market.
Got
But
it.
it is changing. It is changing faster. However, on the engineering side and MS side, it continues to be 70-80% of the freshers, because especially the people who are going abroad, they complete their engineering, 4 years of engineering degree here,
Right. Right.
and
Right.
then they immediately go abroad.
But that makes more sense, right? These technical degrees definitely makes more sense to just go keep
100%.
studying, learn more, perfect yourself, pick a specialty, and then go and do
That is
something.
right.
Whereas from an MBA standpoint, you really should have some kind of context for business and be a little bit more senior. It makes sense to
Absolutely
me
right.
as well. Um, you started your career the same way I did. You had a bunch of corporate jobs. You learned a lot about building corporates, and then somehow you got dragged into the startup world. Good for you. Um, what do you want to talk to people, like if you were mentoring an entrepreneur, what are some of the things that you would try to tell them, right? And I would ask you this too, like, what do you think makes a great founder, regardless of age? What do you think makes a great founder?
uh, After all said and done, my experience is that it boils down to some very very fundamental things, right?
Go ahead.
how how passionate are you about the cause, what you want to do, right? How
Hmm.
passionate? because skills, knowledge, everything can be acquired.
Yeah.
But if you're burning with desire to solve some problem, and that desire almost always uh, can overcome any challenges which are going to be more than you can actually imagine in an entrepreneurial journey. The chips are going to be down more than once, twice, thrice. So
Yeah,
at that
probably.
time, I think what can actually sustain you is not anybody else, not external motivation, but how desperate are you for that success, right? So
Yeah, to do that. Yeah.
fundamentally, you need to find that fuel, that fire, that passion within you, and evaluate, are you doing it for opportunity of the business of making some quick big buck, or are you doing for, and there's nothing wrong with it, if you, it's just that
Yeah.
you need to have dollops of luck if that is your approach, right?
Yeah.
if
Yeah.
if the market has to be right, you need to get the right money at the right time, and so on and so forth. But my sense is passion is one of the first thing I would rate very, very high. And second is, I think, your ability to attract talent. I think because ultimately
Yeah.
organizations are about people. You cannot solve all the problems, you should not solve all the problem that you are going to face as an entrepreneur, right? Unless you are building a company who will not need anybody else but then you, which is
Yeah.
rarest of rare. I don't remember any know any company which is run by a founder and few will, only one guy, right? You are going to need people, you're going to need smart people, going to need like-minded people, going to need people with similar passion and all that. And your ability to attract them, your ability to be keep them inspired, your ability to keep them engaged, your ability uh, to make their lives. And I think that is second thing I would advise. And third is, I think, very, very underappreciated, is that most founders, or most people who think about starting a business, are good
Hmm.
at something. Somebody will be good at building products, somebody will be good at technology, somebody will be good at sales, somebody will good at marketing. Not
Yeah. Yeah.
nobody is good at everything.
Right.
I mean, except of course there are geniuses, and there are jobs of the world, and there are
Very
musk
few
of the
though.
world. There are very
Yeah.
few,
Yeah.
far and few in between. But most 99 or 90% plus of the founders, you will have to be aware of your limitations, and you need to find a way to complement, get people or skills which complement. And you need to be self assured under your skin, that you know what you're good at, and you know what you need help with. That's the third thing. Fourth thing is, get get very, very um, comfortable with downtimes. Get very comfortable that context is not going to be same. Get very comfortable with, while you're building, yeah, there are some assumptions. Almost always those assumptions will not play out,
Yeah.
and you need to have the nimble footedness and flexibility to change quickly, pivot, and you need to be comfortable with failures. You need to make the organization comfortable with failure. you, so on and so forth. These are some of the things I think. And last thing which I've personally experienced is, uh, uh, when you're building an idea or a company, you need to first differentiate between, is this the product or service which is good to have for the customer, or must have for the customer. If it is
Mm.
good to have for the customer, please, uh, it will need a lot more money that you think it will need to build that product, if it is good to have, because
Yeah.
they are using existing solutions. If it is a must have product, you're solving very intense problem which has not been solved, or you're solving it differently, then it
Mm.
may be relatively more easy to build that. So that differentiation is very, very critical. And uh, and lastly is that, uh, find the right amount of capital that you're going to raise, because most founders are not good at raising capital. They are very good at building business, building product, marketing, sales. But if you have raised, let's say, way too little, or if you've raised way too high, both are. So need to have right advisors around you. Go to the
Mm,
wise people and ask them, is this the idea? How much money should I raise? And so on and so forth, because you don't want to be spending out of 12 months 6 months on the road and raising, because that's not your strength. Your strength is building business. You should be focusing there, right, in business. So these are
yeah,
some of
yeah.
the things that I would advise people.
That's really, really great. Okay, look, this has been an incredible conversation. I'm going to let you go. Prashant A. Bhonsle, the founder of Kuhoo Finance, filled with experience, filled with insights, and building an unbelievable business. Congratulations on the license again, by the way. Super cool to have you on the show. I really appreciate your time. Thank you so much again for doing this.
Michael, it has been one of the most wonderful. I spoke a lot. I'm not sure I gave you much time to speak, but
Awesome. I don't want any time to speak.
I,
I
I
learned so much from you. It's so
this
great.
is this is me. I tend to get. I had told you earlier. Also get carried away when
I love it. I love it.
I'm very passionate about what I do. But thank you
Mm.
so much. This is really really appreciate, and we'll keep in touch. Thank you very much.